Hey, what's up? Got the effects on. Go. Army bro. Alf, what's up, man? How's it going, guys? I think I'm live public, right? Yeah. Yep, we good. Day Juan. What's up, man? All right, guys. So let's talk about the AMC, and all this stuff that's happening, man, right now with the stock. All right, there are some good things that I think are happening. We're gonna take a look at cycles and patterns. That's the title of this video. Cycles and patterns, man. Patterns are gonna be some of the reference patterns we're tracking to get some of these levels, these fib levels, these natural fibs, man. We call them natural fibs because they really, really do help with these price targets, these macro price targets that we have. So we get straight right to it, man. All right, so we're down 2%. Very like choppy back and forth, right? I mean, you go on the micro time frame here, and AMC is just coming up and down between. What do we have here? About 20%. That's crazy, guys. We've not seen this before on Amy for a long time. I mean, we would trade 20%, these 20% ranges between months, and we're doing this in literally intraday, just back and forth, 20%. Like, it's absolutely crazy, the volatility that's taking place right now on AMC. Okay, so one thing that I am noticing right off the bat too, using some of these cycle indicators, is that volatility is drying out. One way to do that is, well, you take the ROC indicator and you measure. It's just a very easy way to measure volatility, but you can see that we're still trading back and forth between that 20% range, but it's nothing near what we experienced on this massive pump. So we are trading sideways. This is what we call a theta channel, specifically with options. We know that market makers use this to drive the price up and down. And this right here is a very important stage in the cycle because, well, from here, once we get that next breakout, that volatility zone, we should start to see that gamma effect take place here. And that's why that price target still holds, guys, at $13 by the end of June. The end of June is going to be the next quad witching date. If you saw that last video I talked about the market phases and quad witching dates, all that good stuff. This all has to do with the cycle. All right, and I want to answer some of the questions, some of the comments I got on that video. You're talking about this cat thing that's coming up. Now, all that stuff, guys, I mean, we've seen this time and time again on AMC where, certain things come in, the SEC regulates certain things, and I think there's a lot of hype on that, right, with AMC specifically. And sure, that could be tied to this whole cycle thing where we start to see volume flow in before. On the projection that I do have for AMC hitting those targets, there's a few different reference patterns I'm tracking for that, but I'm also just taking a look at these major expiration dates, because that's how we know that these market makers are going to have to hedge for this massive pump here, and they sold for high premiums. They have to hedge if the macro trajectory is bullish. So I want to answer those questions first. A lot of people were asking, like they were a little bit confused, I guess, by the chart. And I do want to talk about it here. So the orange chart here that you're looking at, the projection, these are standard expiration dates in the market. So the monthlies are going to be a little bit different. Monthlies do expire at the last Friday of the month. These expire the third Friday, so a little bit before. And what I noticed here by doing this with other stocks, one of the ones I was tracking was Carvana, was that there wasn't as much volatility with the monthlies. For some reason, the standard options it just have more volatility. There's more volatility events inside, whereas the monthly expirations have a smoother curve. With quad witching, I said that this is what establishes macro trajectories, because if you look at, we took a look here at Carvana. All right, as soon as we hit that second target here from the start of the cycle, we took it from point A to point B. There's 4 quad witching dates in the year. Usually that second one does a good job at establishing the macro trajectory once we exit accumulation. That's very important, because if we haven't exited accumulation yet, guys, this does not hold. That's why I'm saying that this target here next is very important. And that's what these are, right? This is the quad witching date. These are quad witching date expiration dates. Now, say for some reason, I don't want to mess with this projection here, but if the quad witching date is higher than the last, so the last quad witching date we had in March here, okay, was about 450, right? So even if it's above that, we do have a stage here in the cycle, the year-long cycle, where the price remains flat. So that could also be the case. We don't have to go all the way up to 13. It would be nice if we did. But even if we were trading, say it goes up to 8, comes back down to 7 or 6, that still is, that's still a macro trajectory that points up, right? And that's all we need right now is for AMC to have the macro trajectory change. It's very important because right now it's still pointing down. There's a lot that needs to happen for it to start to finally turn around here. So next, okay, here's some patterns I want to talk about. Typically, the way that I see these sort of pump and dumps, these very short pump and dumps play out. So you do have a period where we trade sideways in this range. It's almost making a cup, like a massive cup. There was, I believe, a stock yesterday, or a cryptocurrency that I was tracking that was doing something similar on the micro chart. So I'll pull that up here, but I do want to pull up two patterns I'm tracking. So one of them is SNDL. On this one, if you guys are familiar with the cannabis stocks right now that are pumping, this one does have some correlation. Okay. SNDL in 2020 versus AMC now. So the easy way to do this, do 50. We're going to do 50 here as well. Okay, so this pump on SNDL lasted November 5th to November 9th. And guys, when this happened here too on SNDL, AMC was also pumping. So there, the correlation here is pretty strong too, considering that both were pretty much having like a tiny squeeze here before before the major squeeze in January. So like both of these are pretty good correlations to track. But okay, so November 2nd, it peaks November 9th, so that was a week, right? It goes from $1 to about 6. Okay, 372. Okay, now we have another one that we're tracking, right? We have Carvana that did this, but it did it a lot slower. It took about a month. These two, correlation is that, well, they did it in about the same time. I know AMC, we did have, 3 days, well, May 10th, no, about 2 days before the dump. And with SNDL here is about a week. Now, if you take it from the low in, well, here's just the gap up, November 6th. So pretty much the cycle here is working in a similar fashion, right, as SNDL. What happens right after that, it's such a quick dump. The price comes down, accumulates for a few days, and then it starts pumping all the way back up to create new highs. Okay, and this is where you guys can kind of see the cycles here speed up. Right? You take a look at the Carvana cycle. Okay, this all happens, man. Right, this all happens in a month. November, December. Carvana, we have, yeah, this is like almost 4 months before it creates that next high. But you like look at the similarities between the two and how quickly it sped up the algorithm here. We have the same double bottom setup, the same POI following that double bottom, and then we have that continuation right here. So as soon as that happens, the algorithm here is doing something else before breaking even higher, right? At this point, we're looking at, this is a macro projector, and once it does this, it keeps going higher, higher, higher. So same thing with AMC, and this is why I'm saying, like, tracking this cycle, exactly 1-to-1 is not the best thing to do, but we can take a look at options, right, to figure out where we are in the cycle, because pretty much the ultimate goal is almost always the same for a lot of these stocks. Like, it just depends on where you are in the phase, and that's why we have some of these phases that are slower and some of them that are a lot quicker. I think that's just the nature of meme stocks, is they tend to rally these a lot quicker because they know, again, the retail behavior is just different with meme stocks as it is with some of these other stocks. And it's completely fair to say that, yes, AMC and Carvana are different stocks. They do behave differently, but it's definitely a good way to track and see how these market makers are using these instruments, right, to drive the price. So anyways, back to this whole SNDL thing, right? We have the pattern here. It is 1-to-1 on this one. I have right over here. Okay, so it accumulates down here and then it starts climbing back up. So the projection I had here is just slightly different, and it's based on a few other things, right? A few other patterns. The quad witching date being that is very important. So pretty much this is saying that by the next quad witching date, if we come up here to that range at 13, we don't have to end the trading day on June 21st at the same range. This could come up to 14, fall back down. Again, the trajectory would still be pointing up, even if we end at the $8 range. It would still be bullish. We can go up next to, end at 12. But my point here is that the price is likely going to be crossing back and forth between the macro trajectory. And this is why it's important to cover and talk about this, because a lot of people just want, a pump. But, guys, I've been on this stock for a really long time to know that these guys, they focus heavily, and I'm saying this, I know the majority of you have been here as well with me covering the stock, but for those that are newer to the channel, the way that we've seen this happen before is with theta is very important, and most retail traders are going to be doing the whole option thing with AMC and GameStop. And what these guys don't want you to know is that the macro trajectory, when it's established, they have to hedge on the way up, right? And the way they do that is, well, they have to collect the premiums. Why they pump the price up very quickly is to collect the premiums and then shut them down, and then pretty much try to maintain the price at a pretty median range here by that expiration date, as that's where max pain comes in, right? You start to look at how many calls, how many puts are outside of the money, and pretty much you stay right in the middle for that. That's pretty much what this trajectory is. You can also track this with a parallel channel. That will give you a good range as well. Some of these trend lines, but I just like to use a trajectory line here and then look at patterns after that. So yeah, man, SNDL is one. The other one I found was, you guys know I love looking at premium charts for crypto. The other one I found was pretty cool as well. It's actually Loom. Loom is one of the cryptocurrencies that has a lot of volatility. This one, I think it displays the entire cycle, the levels very well, but the timing I don't agree with. The timing, this one is pretty much saying it would come up to 13, 15, get shut down, and then come all the way back up to the $40 range. I think the $40 range is a good target for the macro chart, and looking at everything else we talked about, but the timing here would probably be slowed down once that $14 range is hit. AMC actually did this back in 2020. Okay, it did a version of what's happening right now. This is why I think the algorithm is just going to do that again in its own way. So back in 2020, guys, right here. The SNDL pattern that I just pulled up, same thing. It was in November. It started to go up right here, early November, and now it seems that AMC has picked off on that. Also wants to maybe do this sequence a lot quicker. Right here, it took November 9th, November 24th. What? That's like almost 3 weeks. Okay, so this entire, like, even before it pumps, it does the same sort of wedge setup, or you can call it, yeah, kind of like a wedge, rising flag maybe, or rising wedge. Can't really tell what it is, but it does the same thing before that volatility event. We have on the Discord, we call this the M-shaped pattern. This is like a version of it. They'll try and shake off some traders before they just pump it. But yeah, once that happens, guys, same thing. Like, this is just a smaller version of that. I wouldn't see things completely playing out the same way, right? If you take a look at the, what happens after this, the price dumps all the way back down to new lows. I don't see that happening. If anything, once it reaches that range, I think the algorithm would start tracking something else at that point. But yeah, man, that's I mean, a lot of these patterns. Another one is GameStop. I think GameStop is a good one to track as well. We'll get to the cycle here in a little bit. I just want to cover some patterns first. Talk about the patterns. GameStop in 20. What is it? I'm sorry, guys. It's not GameStop. It's Mara. We're using some patterns here for Mara. It's game. So Mara is right here. Okay. Before breaking down, it had the same. So yeah, a version of that, right? You have the rally, it gets shut down almost completely, trade sideways, and then it comes back, reaches not all-time highs, but the previous highs. FTM, believe, was one of the cryptocurrencies, because yesterday, guys, crypto was pumping like crazy. If you guys saw that, I'm taking a look at the crypto markets too. It's kind of funny that you have GameStop and GME just dumping like crazy. We talked about this last week. Wouldn't be surprised if that liquidity was used in the crypto markets. And I believe it was, man, because Ethereum, I think, went up like 20% yesterday, which is, I think, one of the biggest just single-day gains on Ethereum in a while, probably since 2020, that we've seen something like that on Ethereum. So crazy stuff is happening in the crypto markets, which it just goes back and forth with this whole thing, guys, where, liquidity is used in some form of way. We tracked Ethereum Classic for the longest time on AMC. We found a way to track how liquidity was being used between the two. And I think it's just the same thing happening right now, but there's, I think, other cryptocurrencies that are coming into play. And right now it seems like the roles are slightly reversed, in the sense that, before we used to track Ethereum Classic, which would go up first, but now I think the roles have reversed a little bit, and now we have AMC going up first, and crypto going a little bit after. So I'll get more into that in the video here, but let me pull up the pattern I was talking about. Somewhere. Ooh, what's happening right now? Is there some news or something? That's a big red candle. Yeah, look at that. Whoa, what's happening with crypto right now? Or FTM. Phantom. Look at that. That's a nasty red candle since... Is it crypto, or is it just no, I think it's just Phantom. Crypto's okay right now. Absolutely crazy on this pump, guys. And I don't think it's done. I mean, I think next, now we're going to see Ethereum break all-time highs. But this right here confirmed the POI we were tracking on crypto. It just flipped. Perfect. Everything is tracking according to the macro projection on Ethereum and all crypto. So excited about that. Hopefully this holds right and we don't get like a fake out or something. But if it holds, yeah, this right here is very important. I think crypto is going to start pumping again, and Ethereum should break all-time highs now that that Bitcoin did. It's Ethereum's turn to do that. So with that, the whole crypto thing, yeah, I was tracking the correlation between the two. So again, with AMC going up first now, we can track Ethereum Classic because they do have a similar pattern structure right now. Ethereum Classic just started going up yesterday. It went up like 19 or 20%. Before doing that, look at the formation, right? And this isn't even like, I mean, you can't really compare a 20% pump with Ethereum, versus AMC, which had like a 300% pump. But what this means, I guess, for the future for Ethereum, I mean, it's the same thing that's happening right now. Like this section, right, from April 16th, the same thing here for Ethereum. In the crypto space, it trades 24/7. It's a lot choppier, and we haven't seen that same volume candle here on Ethereum Classic. But if you take a look at the macro chart here for Ethereum Classic, it's kind of behind the rest of the crypto markets, and I love the setup it's making right now. If Ethereum starts crossing all-time highs, I think we're going to see a rally on Ethereum, and then maybe the correlation will come back. Remember that as the cycle narrows down, things start tracking 1-to-1, they do break away again, and I think that's why we're seeing that effect right now with AMC going up first, rather than seeing Ethereum Classic go first. So yeah, I think exciting stuff coming up, guys. Something else to track here. I'll show you real quick what I think Ethereum Classic is going to do here because of AMC. I always use this cycle, man, because I think it's when we look at the cycle, we use the AMC arc because I think the AMC arc formation here is probably the best at identifying these POIs. You can use it. I mean, I use this thing on everything. But here's an example of an inverse POI. AMC's arc. So this is where I think Ethereum Classic is in the cycle. So flipping this again, we have the AMC arc, which is inverse. And then right here, okay, so it's like pretty much almost the end of the cycle before bottoming. And this is where we won't track the levels really on this inverse arc formation, right? Because the levels wouldn't be relevant at that point. I don't think crypto is just going to be like trading sideways before popping. I think from here, if Ethereum crosses all-time highs, this thing is just going to start shooting up, breaking new highs. But yeah, guys, look at that, man. Ethereum is just making a massive, massive cup. This accumulation period on Ethereum Classic is classic, man. It's a classic freaking accumulation period. I don't think I've seen a better, more symmetrical looking chart than Ethereum Classic. It just Bitcoin also, remember, Bitcoin breaks the highs first. What else happens? We have the version, I guess you could say, of Bitcoin and Ethereum Classic would be Bitcoin Cash. I know they function differently, but I think in terms of like market cap, you could probably compare the two a little bit. This one already broke the, it traded, it was definitely suppressed, more suppressed than Ethereum Classic, but it did break the highs a lot quicker, the previous highs a lot quicker. So I think if you take a look at both using all-in-one indicator, you're going to see that Bitcoin Cash is ahead, and is also making its way up. But I think now that Ethereum is going to go, we're going to see a surge on a rally on Ethereum Classic, man. Red Dragon, do I think that the calls right now are pumped in IV? Yes, I do still. It's too early for a not saying it's too early for a like a quick correct like retest back at 13. That could happen next week. But I still think that say the price comes back down to 4. That was the target, the 4 range. If it does that, then you're going to see a greater hit in these contracts. And IV is very important. Implied volatility, as theta, theta is going to affect the IV. The more you trade sideways in a range, and the more supply and demand will also affect the value of the contracts. But the more people are selling these calls and stuff back to the market maker, that's going to dry out the volatility. It's also time is going to affect the contracts. So yeah, it depends a lot on what contracts you're looking at, what strike price, what expiration date. All that has to do with the value. But the ones that won't be affected as much and with volatility and theta are going to be like leaps and stuff. Those, all you really have to watch out for is the price, where the price is being, where the price is trading at. In this case, well, they did take a hit because the price went from 13 to 4. It's closer to what, the same percentage as almost owning the stock if you have leaps. There is a little bit more leverage involved with that, but it's almost about the same when you're trading those. It also depends with the strike price, if it's extremely outside of like if it's outside, say you have like $22 calls or something, those are extremely outside of the money. So those will behave completely differently than, say, some that are in the money or close and near the money. I do have a tool here that is crazy right now, but it's an option calculator where I'm able to kind of forecast the profits and stuff. It's pretty cool. So I don't know, say I'm just playing around with it, right? 620, target price 10. I don't know. 10, strike price 10. Implied volatility is high. I don't know. Let's see what implied volatility is at. It's just a tool I use here to kind of project what the return would be. TradingView does not have options, so you can't just do this on TradingView. I wish they did. That's why I have this indicator here, because it's the only way I'm able to do it. The only thing I need is implied volatility, because they don't have that data either. So you do have to use a third-party broker or something that gives you that. But AMC, if I was looking at the $10 calls or something for July 19th. Expiration date, July 19th. Implied volatility right now for that is sitting at 214. I was close. And say that's my target price, say that's my exit date or something. This just gives you a good estimate, right? Right now, these are trading at 62 cents, so the current is correct. This uses the Greeks to figure out the current price and then what it would be worth at the current price. And then it also kind of tells you what it could be worth if it's trading at that range by that. Now, this does not calculate what the implied volatility will be in the future. So that's also something very important to note with this indicator because implied volatility will change like crazy if AMC starts to pump again to 10 very quickly. This number could be 300 or 400 or something. So a lot of that has to do with the target, but most stocks this indicator will work very very accurately because not every stock in the market behaves like AMC, right? So but that's just a little projection based on that. If implied volatility remain the same by that, you can kind of see here what the strike, the strike 60, $10 call, 60 cents, and then the target for that would be about 240 if it did that. Now, if it remained flat, right, this is another way you can kind of calculate what would happen to the price. But say that the price remains flat until June 10th or something, and volatility goes down. If it's June 10th, remains flat, or it goes down to 4, and implied volatility goes down to 180 or something, right? They would go from 60 to 10 cents. So that's how crazy implied volatility is. Now, if say implied volatility remains the same, it would still take a hit from 60 to 20. So just a good way to kind of see what how options take a hit here, or how profits work, right? What profits could be. All right, so here's all in one. Just to see what's going on in the markets right now. We have a GME kind of making its way up. We also have Peloton, BNGO, NVEX, KK. I did see a post too, and I'll take a look at this, man. Somebody commented on Twitter, and they told me to look at what was it called? No, it was called R something. Oh, rent. I did like that correlation a little bit too, because so this in terms of time, I think this is a really good correlation. It goes from 4 to 28, so it does go up a little bit higher. It goes up about 600%, and then it climbs down to 9. So we're kind of sitting, like if you take a look at the levels too, the ratio is very similar, right? It falls down to the same range, and then it breaks those highs, and then it goes higher. And in terms of time, it does it in about a month. So this is, April 12th to April 14th. Comes back to those highs. So a lot of these patterns that we're seeing in the market right now are also doing that, which is just a good sign, good indicator here for AMC to do the same thing. Because that's algorithms, man. They're gonna just, you see these like sequences are constantly just being repeated, and in that in that short window, short frame, whether it's a few months or even on the macro, guys, if it's a whole year that these guys are hedging for, you're going to see these smaller fractal versions, their own versions, right? But ultimately similar levels. And that's not always the case, but that's one of the things that I definitely do track and look at here, because it has happened many, many times. ACB is another one. Mara, we already took a look at. Okay, so market cycles now. Talked a little bit about the patterns. I want to talk about the market cycles. So on the video, I covered, and when I go live, guys, I just go more in depth and kind of answer questions and stuff, take a look at intraday, all that stuff, right? That's the goal for these. So remember that the phases are going to be different in time than the Carvana cycle. That is a lot bigger. It's a lot bigger. It's almost 3 years of data. AMC is doing this a lot quicker because it's a meme stock. So the declining phase, for example, for AMC, once we grabbed liquidity, it came down, got shut down, and then August was declining for AMC. It just boom, 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 very quickly. Redistribution, pretty much we have a little dead cat set up, and then it starts to redistribute again. Now, this is a combination of redistribution and accumulation, in my opinion, because they brought it down so quickly that if the price is going to go up to 40, if that's the target, then it makes sense that these guys start accumulating at the $6, $7 range, going all the way down to $3. Right in that range, a lot of accumulation. And what establishes the macro trend, and this is why it's very important, is the quad witching curve line, right? And this is why it's very important that if it does go up to 13, that's going to give us a good macro uptrend. It's just a probability thing. It's not like a stock has to do that. If a stock is in macro distribution or something, then that wouldn't necessarily hold. That wouldn't be the case. I'm using these reference charts to understand how option expiration dates show us like what phase we're in, and I do like how this like dumped. I know that sounds kind of weird to say, but the fact that this dumped the way it did, it just shows us that the algorithm is what is it going to do with this volume is what I'm saying. And it held. This is not a pump and dump. It held up to a very important fib level that we were talking about. Why that $4 range is very, very important. So breaking accumulation, finally breaking accumulation here. If the trajectory holds and is pointing up, reaccumulation is also going to be choppy, guys. And that's another thing I was getting in the comments is like, why are we going to be choppy? Why are we going to trade in this range, until October? And that's because that's how market makers are going to make their money, man. That's just the way the market works. It's rare that you just see a stock pump, and not stop. The difference between AMC and crypto is the instruments that are used to pump the stock. In crypto, we have leverage, in the market we have options, and we also have leverage. There are you won't be able to use options on like smaller cryptos that pump the way they do with the volatility. So that's why it's very different. You see a lot of these cryptocurrencies that are just pumping. AMC has an option chain, man, and it's a lot easier to have a cycle kind of set in place, because that's what we've seen before, right? Than it is to just release everything all at once in a week, right? Where it goes from these levels up to the macro target from 41st, and then potentially 80 would be next after that. But it's extremely hard to do that in such a short period amount of time with an option chain. So yeah, man, that's kind of answered the question to that. So yeah, I do think we're exiting accumulation. It's a mix of redistribution. It should be about almost a year long, actually, or 8 months. 250 days, man. The last accumulation period we had was 300. So, I mean, yeah, just look at that, man. This was accumulation right here. March 2020 to January. And then boom, starts pumping. That's all they need, I guess, right? That's all these market makers need to make their bread. And then they bleed the stock for years. That's the worst part. Distribution is typically the longest phase in meme stocks, as we've seen. Meme stocks. Not the markets, not high cap stocks, mid cap stocks, maybe, depending on what stock it is. But meme stocks and high volatility is they will take their sweet time on the way down. It's the volume that we are seeing in AMC on the half days compared to the prior squeeze. So it's very different, and I guess part of the reason why we're seeing this much volume at these levels is so, and I guess it is slightly different to compare because the dilution has been done, right? These levels are going to be the same. Like when you look at the chart here, these are like new lows of the AMC chart when looking at the outstanding shares. But it's not the same, with like market cap or anything like that. So it is slightly different. I do have an indicator here that shows us that. It's called, I call it volume. And this is just volume times price. So I know this is going to have a like it's not going to be the best representation of the AMC chart just because of the split. Splits are very important to do with this, but it is going to show us something. Yeah, it's a better way to see. Yeah, it is a better way to see the chart, man, because even market cap, like, also has its flaws too. Volume times price is a really good way to see it. This chart right here almost looks like Ethereum Classic a little bit. Yeah, this right here, what happened in August, man, just really, really messed with the chart. But look at how these two look, right? The market or the volume indicator here, you bring it on up. You compare it a little bit to Ethereum Classic, and it looks better than the current chart. So for Ethereum Classic, it entered, so accumulation was from December, so about a year to 2023. Looks like 2023 almost the entire year was accumulation, and then now it's a reaccumulation before advancing. Advancing is where we start to see this, like these squeezes happen. Okay, I'm gonna do 250. I'm gonna see how 250 now. It pretty much is gonna show us the entire chart at 250. Let's do 5. Two. So it actually, guys, volume does look very similar to both POIs in April and August. Very similar to both of these, which is kind of crazy to think about when just looking at volume. That's why you have such a massive volume. Yeah, it's like suppress, suppress, suppress. Nothing is going on here. And then once the POI hits, the volume is similar, not the percentage. The percentage is different, but volume is similar, which is a good measure to have too with this kind of thing. Because just thinking about it, if this much volume, if this is all the volume it took, if you compare it to what happened here, then this is why volatility is so crazy right now. It goes up almost 400% in a matter of a few days. And over here, the same amount of volume only took it up about 100%. So 4 times less. So that's a pretty neat thing to see on the chart. I don't think one's going to work. Oh, it does. 1 day. So if we just take a 1 day measure here of that, we're at the same levels of May of 2021. Yeah, I mean, this would be absolutely crazy if we start to see these levels of volume are going to be way higher because the price is just lower. That's just the way it is. That's why there's just a giant candle here of volume we've never seen on AMC's chart, and a lot of it also has to do with like dark bulls and stuff, like a lot of these major prints here in volume. But ultimately, I think it is a fair representation of like how the price, like why the price went up to the degree it did, and I almost think this is a good thing because, yeah, I mean, if we're seeing the same amount of volume being used with in the ratio of AMC here, comparing it to May, August, and March, 2021, 2022, yeah, that's 300, 400% for the same amount of volume is absolutely crazy. All right, let's do 50. In a 50-day, you start to smooth the chart out a little bit, so you don't really see as much happening anymore. Yeah, this indicator, that's why I have it set to 10, because you really want to see what's going on inside these POIs, and 10 days is, on average, is a good measurement. Okay, take a look here at what's pumping right now. Yeah, people were saying mRNA was pumping too. I know mRNA was part of the section we were tracking in May of 2020. It was in there with AMC, GameStop, and Vax, and all these other stocks we're tracking right now. HIMS was another one too, and HIMS just started to pump yesterday, like 30%. So yeah, the correlation, guys, is strong, strong, strong right now. Remember, not all stocks within that section have to be doing the same thing. It's just, it's crazy how these, these sections we track, we almost start seeing all of them, do the something similar in that window, whether they're pumping or dumping. Yeah, mRNA. What is it doing? It's up a little bit. It's been up though for quite some time now. It's just been kind of riding up. This was a macro pattern we tracked for the longest time, man, on mRNA, and right here, this is an example of an inverse POI. It flipped. But mRNA tracked this. We tracked this since I think November of 2022. The scanner found it, and then it tracked all the way down to support. And then as soon as it did that, we saw the price fall back down instead of creating a macro wedge. Examples of POIs. What was I gonna say? Take a look at the average here. I use IWM just because this one has most of the stocks that I have on this list. I know there is a few lists. I have like 150 that I'm tracking on this indicator here. And I can't use like SPY or NASDAQ because, the majority here are going to be small mid-cap stocks. Trying to figure out, volatility in the markets. But if you look at what the overall markets are doing and where we are, okay, we're taking a look at the rate of change here of the entire market. This is amazing. It's just an amazing way to see what the market cycle is. So this is like just looking at the entire market. And you can see the bottom here was found about April 20th. That was like a bottom here for the markets. And that's a good indicator for just having a direction. This is where certain stocks are going to start pumping first to kind of establish that direction, and then you start to see a bunch of stocks pump along the way on the way up. And right now we're getting very close to market resistance, which would be around the 15% range here. And then from there, it could, start breaking all the way back up. Now, take a look at two sections here, and this is why I think we're going to see something happen here, because the correlation between now, okay, this section right here looks very similar to this section over here. And what happened right here, guys? This is October of 2020. What happens after that? This is January 2021. This is where the entire market squeezes. The entire market. So this right here is a very important measure to track here, because it shows you where the markets are in their cycle. And so this is smoothing everything out for us. Like all of this that you're seeing, all these crazy, crazy stocks that are pumping, this is smoothing that out for us, giving us an average. Now, with that here, if we are in the same range, because right now we found a lot of correlation prior to that here, but also correlation really anywhere between in 2020 to 2021, there's high correlation right now. For the longest time, we saw the markets trade in this lower range for about, everything really started to kind of pump in 2023. So these guys that are going now, you have Mara, you have Carvana, all these guys that are entering potentially what could be an advancing stage or leaving it. Carvana might be leaving it. I think Mara has more room to go. But look at that here. May 7th. So May 2024 is pretty much October of 2020, right? Even October of 2020, you saw GME pump like crazy before coming down and then squeezing in January, right? Absolutely crazy here. December, January, right here. From point A to point B. This entire section right here. Overlaid on top. So pretty much what this is saying is that if we repeated a similar sequence, which right now it seems very similar, some of these levels are just slightly smaller because a lot of stocks got dumped extremely hard. But it would say that by August time or in August there would be like crazy volatility August, and then everything starts dumping again, which checks out, man, because SPY is in a macro theta channel until about that time, until about September, and that time is very important because even if the markets are trailing up and they're getting ready to come down, yeah, it's gives a lot of time and a lot of room for these other stocks to start pumping. So yeah, man, this is really, really good stuff. Really, really good stuff to track. GME, GMR, GME. Yeah, I mean, same thing with GME, man. GME still tracking a nice rally. But I mean, the timing, guys, on both of these, because they did pump the same way. When they start pumping again, they're likely going to pump very closely with each other because the correlation is back for both of these. This is one thing I'm tracking here for GME. Wow. And Nicola's all the way here, the bottom. See, actually, that correlation is interesting because Nicola, September 2020 comes down here. Nicola is like, dude, I think Nicola is getting ready to turn around too. It finally broke like all-time lows, and I believe I have a pattern that I'm tracking on Nicola that is bullish. I have to cover some videos here on Nicola. Yeah, there's a lot. I'm tracking Yeah, and it was once it hit this new low here, almost to grab liquidity. It did get shut down, but I have a few patterns. I have one, I believe it's Blink, that does the same thing. Now the Blink pattern on Carvana on Nicola is sped up the way I have it, because this section here played out a lot quicker. But pretty much what this is saying, and it's crazy that both of these are in the same kind of sector. I mean, one of them is a charging EV company, and the other one is just an EV for trucks, Nikola. So yeah, I mean, putting aside the financials and kind of the sort of scammy nature of Nikola for the longest time, and the whole fraud thing that happened with Nikola. Putting that all aside and just kind of taking a look at patterns and historical, specifically with this one, historical patterns. This one, it has a good correlation here in what we call the tail end of the cycle before it breaks out. That has a accumulation period followed by a spring that takes things to who knows where, right? But Blink Blink already did this, and this is a 5-year chart of Blink, and it did this. It didn't go up the same way. It didn't fall down the same way. But the the accumulation section that we're tracking here, the phase, is very similar. It looks very similar to Nikola. I believe it's tracking like Pepe. Like, dude, even Pepe Pepe looks similar too. All right, guys. Okay, cool. Just wanted to clear up some questions, talk about the cycle and the patterns, bro. The patterns. Yeah, expect more videos to come, man. I'm trying to figure out this whole thing, this new cycle. This new cycle is definitely at play, though. The old cycle, because of the way that we went up here, the new cycle for AMC still holds in the sense that we're tracking the 62-day cycle, but it's no longer tracking. Once we, and I noticed this pretty much, I had it in question already tracking this once we had the volatility event take place here in July, right? When that happened, I was already starting to get skeptical about how the cycle was going to run after that. And then shortly after that, we did have this one hit inside the POI. It did happen. But up until now, I think that with the timing of fractals and what the markets are doing, option expiration dates and stuff like that, because it went up shortly after the POI here, which was end of April. It went up, I think, 2 weeks after that. It is slightly delayed now, where everything that we track inside the 13-day window is as if we were tracking it I believe it's almost 3 weeks behind. So I'll cover that more in depth in a video, but that's where we're at right now with the cycle. Guys, that's going to be it for today's video. For those that did come in, hope some of this gave you some clarity and kind of the outlook that I have here for AMC and some of the things that need to be checked off before the probability is greater. Like the video, and we'll see you on the next stream.